Once again, believe
Good
your
evening, sir.
day was good. So we'll just continue from where we stopped. The last time we were able to have the auditing, we treated the chapter one. So today we move to chapter two. And as I said the other time that there are a lot of correlation between AAA and AAAF, that is the advanced level. So that's the reason I'm using the advanced test, advanced study test. And I think I told them the other time that once we are done with the advanced, they can just go and check. They can just go and check the past questions. And the last time, we were able to bring out past questions from the skills and also from the professional relating to what was discussed. That was chapter one. So today we will continue with chapter two, laws and regulations on audit and assurance engagement. Laws and regulations on audit and assurance engagement. So the other time we talked about reasonable assurance. Then we talked about audit, reasonable assurance. We talked about engagement. So we can actually revisit that chapter so that we can remember what we spoke about, if not all, at least some. We said that audit is being carried out in order to provide a reasonable assurance. So today we will now be talking about laws and regulations on audit. What are the laws guiding audit? What are the laws guiding assurance engagement? What is even assurance engagement? Those are what we are going to be looking into today. So we have the laws and regulations on audit and assurance engagement. This chapter provides details of the regulatory environment that surrounds various industries of a nation's economy. Sorry. The need for laws, regulations, standard and code in the context of audit and assurance engagement. Why do we need laws? We understand, we know the meaning of laws now. What's the meaning of law? If they say some law, what's the meaning of law?
Okay, law can be said to be a legal rules by a
To
country,
lay
an
down
institution, an organization. Yes.
exactly. So, what are now the needs for laws? What are the needs for regulation? What are the needs for standard? What are the needs for codes
Okay.
in audit and assurance engagement?
I,
The public
okay.
interest. Okay, you want to say
Okay.
you want to say something?
Sir.
Are we here? Are you
I'm
with
with
me?
you, sir. Continue.
All right.
I'm
The
with you,
key
sir.
reason why audit and assurance services, the key reasons why audit and assurance services should be regulated is to serve the public interest. Assurance providers gives an impartial professional view on issues that matter to users of financial and other information. It is important that this view can be trusted. Therefore, assurance providers need to operate within ethical boundaries and to consistent standard. The reason why they have actually set down laws, rules to be guiding auditing practice and assurance engagement practices is to make sure that the the public they are not misled. If there are no laid down principles, laid down procedures to be followed, everybody will be doing things on their own. They'll be doing things the way they want. They'll be doing things the way they like. But once there is regulations, once there is law, everybody are going to do it in the way the laws and the regulation has prescribed. The same thing applicable to audit. We all know that after the financial statement has been prepared for the management use and then it is being audited, people tend to believe that financial statement that, oh, since the auditor has ascertained the fact that this financial statement is free from material misstatement, that means this financial statement is good. But what of issue whereby there are no laws and there are no ethics, there are no regulation guiding the preparation or the process of auditing. People can just do whatever they like. So they are trying to tell us there that the reason why ethics is important in auditing and assurance practices is to ensure that individual or assurance providers operate within ethical boundaries. That is the first reason. They must so that they will be able to operate within ethical boundaries and also to consistent to standard. Just as we have in financial reporting, we have diverse kind of standard we call IAS, we have diverse kind of standard we call IFRS. These are the prescribed ways in which we should treat financial statements, and we are expected to be consistent with it. That is one of the reasons why laws and regulations is actually important. You know from your previous studies that assurance providers are regulated by. Now, this is another part that we must take note of. Assurance engagement. Assurance providers, they are regulated by A, the law of the land in which they operate. Assurance engagement, they are maybe an example of assurance engagement is they call one what is it called? It escaped my mind. It escaped my mind. Let us continue. If I actually remember in the process of time, I'm actually going to agree upon procedure. Yes, that's one of the words. One of the example of assurance engagement. It is not like audit. It is not like audit. And we discussed the other time that if it is assurance engagement, you are expected to provide limited assurance. It is limited assurance. It's not absolute. So when we are carrying out that assurance engagement, the law of the land, we must make sure that we imbibe by the law of the land in which we operate or the business operates. B, the ethical standard of the land and the professional bodies to which they belong. And C, the professional standards adopted by their countries. For example, international standard on auditing. So these are the laws that the assurance providers must imbibe with while carrying out assurance engagement. Also, we have ethical regulations. Ethical regulations. Assurance providers are given ethical guidance. A professional bodies, for example, the Institute of Chartered Accountants of Nigeria, ICAN, laws, that is B. C. International Federation of Accountants. D. It is necessary to regulate to ensure conformity with relevant ethical guidance. You should already be familiar with most of the ethical guidance relevant to this syllabus. So don't let me assume that we actually are familiar with it. Do you remember some of the professional ethics that a chartered accountant must actually follow? What are the professional ethics?
Okay, I know of the person must be independent. I know of
Independent
the
one.
confidentiality aspect.
Confidentiality.
Confidentiality.
Okay. Okay.
Um,
There
which
are
other
five or
one
six.
again?
I think there are
Professionalism.
five.
Person
Professional
must be
competency, professional behavior.
competency.
You need to go and
Hmm.
revisit these things
How many did I
because
mention?
you mentioned four now.
Okay, sir.
So uh, we have independence, we have integrity, we have confidentiality, we have professional competency,
Behavior.
we have professional behavior.
Okay, okay, this okay.
Okay.
Integrity, objectivity, confidentiality, professional
So
professional behavior and competency, ba?
competency, which
That's
says that
competence.
before you actually accept a particular audit practices, you must be competent. You must be competent to do it. You must be competent. So we have 2.2.2 legal regulations. Most countries have their requirements associated with some assurance providers. particularly auditors. Example of these legal requirements in Nigeria can be found, for example, in the Company and Other Matters Act, Bank and Other Financial Institution Act, Pension Reform Act, Insurance Act 2003, and Financial Reporting Council of Nigeria, Nigeria Audit Regulation 2020, rules issued by the Financial Reporting Councils of Nigeria. They are just trying to talk about legal regulation. Don't forget, we have talked about what? We have talked about the needs for law and regulation standards and codes in contents of audit and assurance engagement. Then we take another topic, ethical regulations. Those are the regulations that an assurance provider must actually put into consideration when carrying out their their work. So we talk about regulation, ethical regulations. Then we are talking about legal regulations now. Ethical regulations, they are just those regulations that your professional bodies have actually put in place. Then they talk about the one for professional accountants, the one of ICANN, the one of IFAC, and then the necessary regulated authorities or regulated relevant ethical guidance. Then now we have talked about ethical regulations, legal regulations. Then we move towards changes in standard and technology. The operation of the companies and industry are dynamic depending on what the societal or global landscape required. It is necessary to ensure standards, law codes, and regulations in audits and assurance engagements are made to reflect the requirements of the changes. Then we move to appointments of auditor. This is one of the examples of the what's it called, the legal regulations. Legal regulations. For example, now in Nigeria, we have a law, the Company and Other Matters Act. This is the law that governs the company. So an assurance provider must actually make sure that they comply with the laws that the Company and Other Matters Act has actually stated. So it is now they are now trying to bring out some wealth or some section from Company and Other Matters Act in relation to what? To auditing. Then we have appointment of auditor in Nigeria. What does CAMA says as touching the appointment of auditor in Nigeria? So let us try to read what they write here. I think during the last class, I explained all this appointment of an auditor. I explained it, but let us delve deep into it. Appointment of an auditor, appointment of auditors in Nigeria. Every company shall at each annual general meeting appoint an auditor or auditors to audit the financial statements of the company and to hold office from the conclusion of that until the conclusion of the next annual general meeting. That is what the law has said, that every company must what? Must appoint an auditor at their annual general meeting and to hold office from the conclusion of that until the next annual general meeting. At any annual general meeting, a returning auditor, however appointed, shall be reappointed without any resolution being passed unless he is not qualified for reappointment. So they are now telling us the basis in which, like, I don't know, maybe you are getting this thing.
I'm with
Hello?
you, sir.
Okay. Now they are saying that
I'm with you,
every
sir.
company every company must appoint an auditor at their annual general meeting, and that person will hold office from that annual general meeting till the next annual general meeting. So at the next annual general meeting, the auditor can actually be what? Be appointed again without passing any resolution. But in the situation whereby the auditor is not fit again, the current auditor is not fit again, they can actually reappoint another person or appoint another person. So now they are now telling us what can make an auditor not to be qualified for reappointment. And number one is he is not qualified for reappointment. He is not qualified for reappointment, or a special resolution has been passed at that meeting appointing some other persons instead of him, or providing expressly that he shall not be reappointed. Or he has given the company notice in written of his unwillingness to be reappointed. So these are the three bases in which the auditor may not actually be reappointed. The first is that if he's not what? If he's not qualified for the appointment. The
Right.
second is if the
Mm.
special resolution has been passed as at that meeting sorry, special resolution has been passed at that meeting appointing some other person instead of him. And the third is by resignation. If himself has actually tabled down or submitted his resignation letter that he will not be able to continue with that particular company, then he's not qualified for the appointment. For the appointment. So
Number
all these stories,
that's number B. That B part. Are you hearing me?
okay, I can hear you.
That B part, like, can you explain it like to me? Because like the first one and the second one, I can actually say something like when the person
Okay.
is not qualified, and the last one is when the person doesn't have interest again. But the second one, what would you say? Like, what's the this thing?
Okay, let's say that after they have actually appointed that auditor, annual general meeting holds once in a year. We have annual general meeting, and then there are some special general meeting that they can just call at any time. Let us now say that after they have appointed that auditor at the annual general meeting and is expected to use 1 year, if they want to appoint him again or disqualify him or appoint another person, it's supposed to be in the next annual general meeting. Let us now say that before the end of the first annual general meeting, the first of the before the end of the year of the annual general meeting, the current annual general meeting, they now came together, sat together, and they were of the opinion that no, this man should not continue this office, or we cannot, if he's not qualified again, maybe due to this, due to this, due to this. If they have actually made that resolution in that they are meeting that this guy should not continue as an not be reappointed. Do you get it like that? That is what they call special resolution.
Yes, sir.
If special, the word special,
Yes, sir.
if special resolution has been passed at that meeting appointing some other person instead of him, or providing expressly that he shall not be reappointed, then he will not be reappointed at the annual general meeting. All right, you can read all this story. Okay, okay, let me read it because there are some words there. I said it last class, but let me read it so that we can establish that. Provided that provided that when notice is given of an intended resolution to appoint some person or person in place of a retiring auditor, and by reasons of the death, are you seeing the reason now? Reason of the death, incapacity, or disqualification of that person, or of all those persons, as the case may be, the resolution cannot be proceeded with the retiring auditor. The, the the resolution cannot be proceeded with. The retiring auditor shall not be automatically reappointed. Where at an annual general meeting, no auditor are appointed or reappointed. The director may appoint a person to fill the vacancy. Now, I remember last class I was saying that if they don't appoint an auditor at the annual general meeting, the director may now appoint an auditor. And that is what they're trying to bring here. If they fail to appoint an auditor at the annual general meeting and there is vacancy, they have not appointed anybody, then the director may actually appoint another person to fill the vacancy. The company shall, within 1 week of the power of the director becoming exercisable, give notice of that fact to the commission. And if a company fails to give notice as required, the company and every officer of the company who is in default shall be guilty of the offence and liable to a penalty as the commission shall specify in its regulation, subject to provision in Company and Other Matters Act, 2020. The first auditor of a company may be appointed by the director at any time before the company is entitled to commence business An auditor. An auditor so appointed shall hold office until the conclusion of the next annual general meeting, provided that, before I read the one under provided at, just want to stress a little bit on this particular word, on this particular sentence. So if a company is just establishing, if the company is just coming into what, into existence, and then they don't have auditor, as at that time they may not have gotten any auditor, then the director may actually what, may actually appoint an auditor to commence the business with them, and that auditor will what, will hold the office till the next annual general meeting, provided that the company may, at a general meeting, remove any such auditor and appoint in their place any other person who has been nominated for appointment by any members of the company, and of those nomination notice has been given to the members of the company at least 14 days before the day of the meeting. If the director fail to exercise their power under the subsection, the company may, in a general meeting, convene for that purpose, appoint the first auditors, and thereupon the said power of the director shall cease. The director may fill any casual vacancies in the office of auditor, but while any such vacancies continue, the surviving or continuing auditor or auditors, if any, may act. For entities like bank and insurance company, the appointment of the external auditor is subject to regulatory approval. So we dey talk about remuneration of the what, of the auditor. And just to shorten this one, the person that appoint the auditor will actually what, will actually fix the remuneration. If the company is appointed at the annual general meeting, then they fix the remuneration at the annual general meeting. If it was the director that appointed the auditor, then the director will fix the what, the remuneration. The remuneration here means the audit fee. The remuneration here is what, is audit fee. That is, when an auditor comes to come and audit your financial statement, you must give him something. He has come to render a service to you, and he must be what? He must be paid. So who fixed it? That's what they are trying to talk about. Who fixed that remuneration? And it can actually be fixed by at the annual general meeting or fixed by the director. So the person that appoint the what's it called? The auditor fixed what? The remuneration. All right. Rotation of external auditors. Rotation of external auditors. The Financial Reporting Council (FRC) of Nigeria Audit Regulation 2020 mandate external auditor to be rotated after a continuous period of how many years? Of how many years?
10 years, sir.
Of 10 years. And for joint audit, after a continuous period of 15 years. 15 years. The audit firm of any members of its network can only be engaged again as auditor after a cooling off period of 7 years. So if your auditor must be what? Must be changed. Even if you don't want him to be changed, he must be changed after 10 years. But if it is for joint audit, it must be after what? After 15 years. Then we have removal of auditor in Nigeria.
15 years. That means after 15 years. Sorry. Are you hearing me?
I'm with you. I can hear you.
Hello?
I can hear you. I can hear you.
That means after 10 years or 15 years, and after 10 years or 15 years, after maybe after 10 years, the person wants to come back, then the person will not wait for 7 years. Is that what they are saying?
Yes, exactly. Exactly. Yes.
Okay.
Yes. All these things is just to ensure that there is independence. The person that has worked with you for 10 years, the person will have known the secrets and all the corner in your room, will have known everything. And there may be a threat to independence. Someone that has worked with you for 10 years, even 5 years, even 3 years, the person will have the independence will not be there again. So the law demands that you change auditor afterwards, after 10 years. Removal of auditors in Nigeria. As seen above, in certain circumstances, the director are empowered to appoint auditor. However, it will be appropriate for the directors to have the power to remove the what? The auditor from office. For example, it will be inappropriate for the director to have the power to remove the auditor because there may be a disagreement between the director and the auditor about an item in the financial statement or about the conduct of the audit. The director would silence the auditor by dismissing them. Clearly, it would be more appropriate for the director to recommend the appointment of new auditors to the shareholder and for the shareholder to decide. If the director resigns from office, if the auditor resigns from office, they are required to give their reasons to the shareholders and notify the authorities of their removal. In Nigeria, it is the ordinary shareholders who are able to dismiss the auditor by passing an ordinary dissolution with special notice at a general meeting. When this occurs, the company shall within 14 days give notice of that fact in the prescribed form to the commission, and if the company fails to give the notice required, the company and every officer are liable to a penalty as the commission shall specify in its regulation. You see, what now they are trying to tell us that the director should be able to what? To fire the auditor. Meanwhile, they are trying to bring us into that particular understanding that what of if there is discrepancies between what? Between auditor and director. The director may actually use the opportunity that, oh, I've been empowered to fire this auditor. And even when auditor is trying to expose the director, and director has actually noticed that this auditor is going to what? Is going to make me lose my job. They can actually silence the auditor by what? By firing them. So they now suggest it is actually it is actually good that the director recommend the appointment of the new auditor, and then the shareholder will now take the decision on either to appoint that auditor or not. Designation of auditor in Nigeria. The auditor may choose to resign during his period of office. Reason for this might include a consistent lack of integrity is demonstrated by management and or those charged with governance. So the auditor can resign even during the period in office if he notices that there is a lack of integrity by the management. B, significant fee remain unpaid. If the significant fee, the larger portion of the auditor's fee or auditor's remuneration is not paid, he may decide to resign. C, the audit firm can no longer maintain its independence when the audit firm sees that, oh, our independence is threatened. We are not independent again. And you know that once they are not independent, they will not be able to express appropriate opinion about the state of the company. D, the client is no longer profitable for the audit firm. However, company law provides certain safeguards to ensure that the shareholders are made aware of any relevant circumstances relating to the auditor's resignation. The procedures for the resignation of the current auditor are: so if a current auditor wants to resign, what are the procedures? The first is written. He must what? He must write a resignation letter and submit it to the what? To the head office or to the regulatory authority. Sorry. The resignation should be made to the company as its register office in written. Then the company should submit this resignation letter to the appropriate regulatory authority. The auditor will submit their resignation letter to the head office. Then the company will submit the resignation letter to the appropriate regulatory authority. B, the auditor should prepare a statement of circumstances. Set out the circumstances leading to his resignation. Why does the auditor want to resign? What has the auditor seen? If this independence is threatened, he should be able to state it in the statement of circumstances. Please note this. The procedure for the resignation of the current auditor. One, written, it must be in a written consent that he wants what is resigning from his duty. And two, he must prepare a statement of circumstances. C, the company should send a statement to the commission within 14 days of receipt. That is the KAMA. All persons entitled to receive a copy of the company financial statement, principally the shareholder unless the court rules that the auditor is seeking to defame the company with needless publicity. D. The company may require the director to call a meeting of the shareholder in order to discuss the circumstances of the auditor's resignation. If default is made in complying with the above provision, the company and every officer of its own in default shall be and liable to a penalty as the commission shall specify in its regulation. So eligibility to act as an external auditor. What make you eligible? What makes you eligible to be an external auditor? I believe you know the difference between internal auditor and external auditor.
I know the different external auditors. Internal auditor are employed by the management. Why external
Yes,
auditor doesn't like it doesn't have is not related to the company that is auditing.
yes. External auditor has independence. Yes, internal auditor also has independence, oh, but that is the generic difference between the external auditor and the internal auditor. Yes, external auditor is being employed by the management, while the internal auditor rather is being employed by the management, while the external auditor is being employed by the shareholder, and their responsibilities actually differs. But both of them can actually work together if the company have strong internal control system. If the internal auditor are actually working effectively, the external auditor won't have a lot of work to do. They will just cooperate with them. They will work together, not cooperating with them, and they will work together, and it will make his work seamless. Eligibility. Eligibility to act as an external auditor is usually determined by membership of an appropriate regulatory body such as ICANN. The role of such regulatory body normally include the following: offering professional qualification. That don't forget, the eligibility is determined by professional bodies such as ICANN. It is not only ICANN, but ICANN is also what? ICANN is also included. Their role is to what? The role of the body is normally to, sorry please, where's my cousin? Okay. Offering professional qualification for auditor to provide evidence that auditors possess a minimum level of technical competence. B. Establishing procedures to ensure that the professional competence of auditor is maintained. This includes matters such as ensuring that audits are performed only by fit and proper persons who act with professional integrity, requiring that the members carry out their audit work in accordance with appropriate technical standard, for example, in accordance with international standard of auditing known as ISA. Ensuring that auditors remain technically competent and up to date with modern auditing practice, for example, by following a program of continuing professional development. You can read it up. You can read it up. But don't forget that the eligibility of an external auditor is determined by one, the what? The professional bodies, such as ICANN. B or two, regulation by government. The alternative is regulation by government. The government may appoint a public body with with similar with similar responsibilities to a self-regulatory professional body. The public body may therefore establish rules and procedures for approving authorizing individuals to perform audit work, for ensuring that authorized auditors have the necessary minimum skills and knowledge to carry out their audit work to a proper standard, for handling compliance and taking disciplinary measures against auditors where appropriate. In addition, it is usual for status law to to establish that certain individuals are ineligible to act as an auditor. So who are those people that are ineligible now? We cannot really say that, okay, these are the things that qualify you to become an external auditor, except those one we have mentioned, that to become an external auditor, it is predicated on the activities of the professional bodies, and also the regulatory the regulation by government. For example, now in a public establishment, it is they will sit together and then they will appoint competent body to actually carry out audits on a public, like on a public, what's it called? How would I put it now? Public, I've forgotten the English I can use to qualify it. For example, such as all these university, all these, tax people as well, they can actually carry out a tax audit. They will appoint someone to go and carry out tax audit on a particular firm or company's financial statement. Are we together?
Yeah.
All right. Sorry, please. So we move to, okay, some people they are what? They are ineligible to act as an external auditor. The first person is what? An officer or servant of the company. An officer or servant of the company is ineligible, is not eligible to act as an external auditor. Who is the second person? Are you
Then
here?
who is the partner
Okay, your
or
that
in the employment of an yes, sir, I'm hearing you.
okay. All right. A person who is a partner of or in employment of an officer or servant of the company, a body corporate. A person does not qualify for
Are you
appointment
hearing
as
me,
an auditor of the company.
sir?
I can hear you now. It was breaking before. That was why I continue.
Hello?
So someone that are you with me?
Hello?
I can I can hear you. I can hear you. I can hear you.
Are you hearing me?
Yes, I can hear you. Hello.
Papa, you can continue.
Okay. So we have a person who is a debtor to the company or its subsidiary in an amount exceeding 500,000 cannot be a what? Cannot be an external auditor of that company. Maybe the company is owing me, a particular company is owing me 1 million. The company is now asking me to come and audit their financial statement. I'm not qualified to be their external auditor. Though I may have I may have a license, I may be auditing other financial statement of the company or some companies, but that particular companies that the debtor to me, I'm not expected to be their what? To be an external auditor. Shareholders and their spouses, they are not expected to be an external auditor in a particular company. If you buy shares in Blessed Connect Telecommunication, and then let's say you are my you are my Lolo, you are not expected, even if you are a chartered accountant and you can practice, you can audit. You are not expected to be what? To be an external auditor in my company because there will be what? There will be threats to independence. A person who has an interest in keeping of the register of holders of the ventures of the company and an employee of or consultant to the company who has been engaged for more than 1 year in maintenance or preparation of any of its financial statements cannot be an auditor. Then we move to rights and duties of auditor. Right and duties of auditor. The local company law, for example, in Nigeria Hammer 2020, will usually impose certain duties on the external auditor, grant him rights or powers to enable him carry out his duty. So we move to the duties of an external auditor. The primary duty of external auditor is to A, examine the financial statement. That is the primary what? Primary duty. To examine the financial statement. B, issue auditor's report on the financial statement, which is then presented to the shareholder together with the financial statement. These are the two primary duty of the auditor. The first is to examine the financial statements, and the second is to report on that financial statement they have examined. This auditor's report will send out the auditor's opinion as to whether or not the financial statements give a true and fair view and been prepared in accordance with the applicable financial reporting framework. Nigeria, the story, you can read it. You can read up the story. All right. Please read up all this story, please. So let's move to right of external auditor. We have talked about the duties. Their duties are two.
Okay, sir.
The first is what? To examine the financial statement, and second is to report on the examined financial statements. Maybe it give a true and fair, or it's not giving a true and fair. They are expected to report on it. So we move to the right. External auditor have some statutory from their what? Their statutory duties. The main statutory right of the auditor per Kama 2020 section 407 and 410 include the following: the right to access all accounting books and records at all times. They have the right to access all financial book of record at all time. At all time. The right to receive notice of all meeting of the shareholder. The right to speak at shareholders meeting on matter affecting the audit or the auditor. So we move to the responsibility of the management and those charged with governance. What are the responsibilities of the management? Now, we need to know difference between the responsibility of the auditor and the responsibility of the management. This is where many people even that's one of the gap, expectation gap. That's when if they say expectation gap. Expectation gap means what the public they perceive auditor should be and what auditor is truly is. That's the expectation gap. Another expectation gap, what the public they actually expect the auditor to do and what the auditor does. That's another expectation gap. So it is not the responsibility of the auditor to be dictating fraud, to be preventing fraud. That is not his responsibility. His responsibility, his duty, is to examine the book of accounts and to report on that financial book of accounts he has examined. Maybe it is actually presented fairly or in non-material material respects, or if it has not been prepared fairly, or if it does not show the true and fair view, they are expected to report on it. That is their duty. That is their major duty. Though in the process of carrying out their duty, they can actually detect fraud, they can prevent fraud, yes, but that is not their duty. The duty of management is one, prevention and detection of fraud. That is the responsibility of the management and those charged with governance. It is their responsibility to prevent and detect fraud. Second, it is their responsibility to prepare the financial statement. It is the responsibility of the management to prepare the financial statement. It is their responsibility to prevent fraud. It is their responsibility to detect fraud. Yes, an auditor also can prepare financial statements for a company. Meanwhile, there is what? There is a clause. It is not an audit again. That is what they call assurance engagement. It's an assurance, it is classified under assurance engagement. And that's again we see in some audit companies such as Big Fours and other audit companies, audit firm rather. You will see them having different sections. There are some people they are experts in tax. There are some people they are experts in preparing financial statements. There are some people they are experts in consultancy. So if a company actually have such kind of departments, yes, they can still carry out the preparation of financial statement. Why? What I'm trying to establish, I'm trying to establish that why the auditor can actually be contracted, or the audit firm can be contracted to prepare financial statement, for the company. It is not their major work. It is the responsibility of the management to prepare financial statements. It is the responsibility of the management to prevent and detect fraud. Another responsibility of the uh, management. Let me just read this. Design and implementation of effective internal control, for example, authorizing payment above a certain amount, monthly bank reconciliation, and a monthly trade payable control, account reconciliation. They are also, it is the responsibility of the what? Management. They are also responsible for providing the auditor with, it is also the responsibility of the management to provide the auditor with access to information relevant to the preparation of the financial statements. What are those relevant information they use in preparing the financial statements? They are expected to present it. They are expected to present it to the what? To the company, that to the auditor rather. Additional information relevant to the audit, unrestricted access to persons whom the auditor need to access in order to complete audit. In order to complete audit. So we move to professional regulation. Auditors are required to carry out audit according to professional standard, ISA, previously NSA in Nigeria. Some assurance work is also covered by professional standard, although this is a developing area and less guidance is available. In many cases, guidance given in auditing standard can be adapted for use in assurance services where there is no specific guidance for the services. Financial Reporting Council. Don't forget, we are still talking about laws, code, rules that guide audit and assurance engagement. So we have talked about legal regulation, we have talked about ethical regulation, we have talked about the Company and Others Matters Act that talks about who what qualifies an auditor to be eligible as an auditor, that talks about the duties of auditor, talks about the right of auditors, that talks about the remuneration of the auditors, that talks about the appointment of the auditor. Then we move to what? We move to, we have talked about professional regulation, then we move to financial regulation, no, Financial Reporting Council of Nigeria. The Financial Reporting Council of Nigeria was set up by Act number 6 of 2011. The act was amended in 2023. The council is shadowed with the responsibility of developing, publishing, promoting, and ensuring compliance with accounting standards issued by International Federation of Accountants, IFAC, International Financial Reporting Standard Foundation, IFRS, International Public Sector Accounting Standard Board, IFSAS, International Sustainability Standard Board, IFSAB, or any other body that may be designated as such in Nigeria. So you can actually read it up and read all the story and read it up. All these rules, please read these rules. Let us go back to that rule. Because those are the areas ICANN will be waiting for you. The Financial Reporting Council, to fulfill its mandate as required by the Act, has set out rules with non-compliance attracting sanction. The current rules are as summarized below. Rule 1. Financial Reporting Council certification requirement of Chief Executive Officer and Chief Financial Officer. That is the rule 1. Financial statement should be certified by at least Chief Executive Officer and who? And Chief Financial Officer. Rule 2. Financial Reporting Council certification requirement for professionals' engagement in financial reporting process, external auditor, officer of reporting entity, and other professional providing assurance to reporting entity. All professional engagement is ensuring certification of financial statements should indicate their name and FRC registration number. This applies to chairman of audit committee, directors who certify financial reports companies, secretariat valuers. Rule 3, provision of audit and non-audit service. Audit and non-audit fee Audit and non-audit fee paid to external auditor or its related entities should be disclosed. Where non-audit services are provided by the firm, this should also be indicated as notes to the financial statement. Rule 5. Transaction requiring registration from statutory bodies such as the National Office of Technology Acquisition and Promotion. This has been cancelled following the judgment against it by the court. Rule 5. Submission of financial statements for which external auditors express opinion other than unqualified opinion. Rule 6. Non-submission of financial statement within the stipulated time as required by the Act. So they give them 30 days to submit the what? Okay, any financial statement of public interest entity approved by the board of directors should be submitted to the council within a period of 60 days. This is a period of 60 days from the date of approval where the entity submits financial statement to a regulatory authority. The same financial statement should be submitted to the council within a what? Within a period of 30 days. Rule 7. Other national disclosure. So we can read others up. Can read others up. Yes. Audit Regulation 2020. Gbogbo àwọn ẹjọ́ yìí náà ni o. I don't want this class to be too long, so we can actually read up all this story. Okay, let us consider this. International Standard on Quality Control, ISQM. International Standard on Quality Control, ISQM. ISQM applies to all services carried out under the IAASB engagement standard, ISA, ISRE. Don't worry, all these short forms, we are going to get to know them as we proceed. ISAABs, I think International Standard Board, IS International Standard on Auditing, International ISRE, International Standard on Review Engagement, International Standard on Assurance Engagement, and then the last one, ISRS. So as we continue, and also you can check your pack, you will see the full meaning there. Other international standard, the other international standard, all this one contain basic principle and essential procedures, related guidance in form of explanatory and other material, including appendices.
Papa, are you hearing me now?
I can hear you. Are you with me? Hello?
Yes, I'm with you.
Okay, please read those stuff that I skipped. This class is
I'm with you, sir.
All right. ISA 402, audit consideration relating to an entity using a service organization. IS 402 was revised to reflect the increased use of service organization. The need to bring the ISA into line with the
What?
You can type. Are you with me? All right. ISA requirements. A. Specifying matters to be included in the auditor's understanding of how the entity uses the service of a service organization. Where the auditors has concluded that control at the service organization operates effectively, specifying procedure to be performed in testing the operating effectiveness of control include obtaining a Type 2 report, testing control at the service organization, using another auditor to test control at the service organization, specifying procedure to be performed if the auditors plan to use a report from another auditor as audit evidence, including being satisfied with the other auditor's professional competence and independence and standard followed. Procedures to determine whether a title report provides sufficient evidence about the effectiveness of control and the sense organization. IS 450, evaluation of misstatements identified during the auditor audit rather. Evaluation of misstatements identified during the audit. As explained above, IS 450 is a new IAS which you see all these IAS, they can actually bring out questions from it. So I know that it is boring, but just try to have a glimpse of it. Try to have little knowledge about them, if not all. Try to get little knowledge about them because there is high tendency that they will just state one standard and ask you to be writing what is under it. So IS 450 is what? Evaluation of misstatement identified during the audit. As we have all these IS in financial statements, as we have IS 36, um, payment of an asset, IS 33, EPS, etc. We also have IS here. So IS 450 now is talking about evaluation of misstatements identified during audit. How do we evaluate misstatements identified during audit? A, accumulating all identified misstatements other than those that are clearly trivial. B, prior to evaluating the effect of uncorrected misstatements, reassessing materiality. C, determining whether uncorrected misstatements are material, considering their nature as well as their size. Then we have documenting. The amount below which misstatements would be regarded as trivial, all misstatements accumulated during the audit and whether they have been corrected. The auditor's conclusion as to whether uncorrected misstatements are material individually or in aggregate and the basis for the conclusion. IS 505, external confirmation. IS 505 now is talking about external confirmation. And this is just how we make use of the external party to actually confirm some documents, to actually confirm some statements in the financial statements. The revision of IS 505 was in response to concerns that requirements in this area needed to be more rigorous compared to the previous version of ISA 505. There are more detailed requirements in relation to maintaining control over the confirmation request, obtaining further evidence to resolve doubt over the reliability of response. Condition must be present if negative confirmation are to be used. So this IS 505, let me just summarize it. Example of IS 505, we have is not debtor receivable collection, debtor confirmation or something like that. That other one that particular one that we use to confirm, we write to the those people that are owing us or those people that the company is owing, asking them to confirm the amount that we have picked from the financial statement that represent the amount we are owing them. So that's just what this one is trying to talk about. How we can use an external body or make an external body to confirm the truthfulness of the figure we found in the what in the financial statement. So you can actually read them up. So we have IS 550 related party. We can check them as well. We have IS 580 written representation. We can check them also. We can check them also. So please, I want to give you an assignment now. I think we are close to the end of the yes, we are close to the end of the stuff. So please go to your chapter 2. Go and study the remaining part that we actually skip because of our time. Just go and study them because of our time. We will not be able to complete everything. Just go and study them. And those IAS 540, IAS 505, have a glimpse of it. Try to learn it. Try to take cognizance of it, and the Lord will help us. But this is where we are going to be drawing the curtain today. I don't want the class to be too longer than this. So thank you for joining. Have a nice day, or have a nice night rest. Thank you.